Thank you very much for joining me today, gentlemen.
Great.
Excited to have you both up here. I know you're regulars on the conference circuit, so you know the drill. Intros, who are you? What are you doing?
Ryan Selkis, founder and CEO of Messari. We're a data and research platform focused on covering hundreds of assets across hundreds of metrics and trying to evaluate more fundamental investing frameworks that could apply to this new emerging asset class behind finger in the air momentum trading.
Hi, everyone. I'm Adam White. I'm the Chief Operating Officer at Bakkt. We're doing a lot of stuff at Bakkt, but at our core, we're a custodian. So we provide the safe, regulated storage of digital assets. We started with Bitcoin. And from that, we're offering a number of products, our futures contracts, so kind of for price discovery in regulated markets, as well as a consumer application that'll launch next year that'll help people not just access, but also use digital assets.
Great, thank you. And before we proceed, Ryan, congratulations are in order. I understand you successfully closed on a fundraise, $4 million. So congratulations, round of applause,
Thank
everyone
you.
who's paying attention. If you want to talk about that for just a couple of minutes, how'd the fundraise go? What's it going towards?
Sure. Yeah, I mean, so we started the business back in 2017, late 2017, which is basically the peak of the bull run. First year of operations, the market went down 85%, which is always fun as you're entering your second fundraise. But we're more of a picks and shovels business focused on the long-term trends and actually creating data structures and norms around disclosures for many of those same assets that raised a bunch of money, popped, and then just kind of disappeared, right? So thinking about what an asset class that was actually fully functional would look like in a couple of years' time when more sophisticated investors would actually consider these different assets. Our focus has been on building tools around disclosures at first, and then anything around business intelligence and kind of fundamentals-oriented metrics that could help smarter non-retail investors actually add some of these things beyond Bitcoin and Ethereum to their portfolios.
Excellent. And you're starting to get into some topics there around disclosure and different standards for data that I want to dig further into later in this talk. But I want to begin broad here. So trust and transparency in this marketplace is definitely something that's difficult and thorny to say the least, particularly from an institutional perspective, I think. Can you just begin, either one of you, by describing what some of those challenges are that exist in the marketplace today?
Yeah, I mean, for most of these assets, Bitcoin is a unique case where the white paper was written, it emerged, the monetary policy, the rules of the game were kind of known in advance and haven't changed too much. So the real debates within the industry are more around the technical roadmap. Basically, everything else has elements that look more like companies, where there should be some type of common sense disclosures around how these things are governed, how updates are made, what the development roadmap looks like, to the extent that there's an affiliated foundation or company. What do those companies look like? How do they operate? Who are the principals? Where are they based? Yada, yada, yada. And a lot of our focus is on the assets outside of just the top two, right? So how do we think about making this whole asset class more approachable and credible so that there are opportunities to build new synthetic type of instruments or new participatory networks that can actually capture value that look a little bit like commodities, a little bit like securities, a little bit like currencies, but that actually at least abide by the spirit of existing disclosures law. That's just kind of one bucket, but the other kind of major things that we and I'm sure Adam will touch on this, grapple with is just how do you get basic markets and blockchain data. And the markets data norms in this industry are as or more atrocious than the disclosure standards.
No, that's
right.
right.
You know this all too well.
Yeah, no, Bakkt was built on the premise of two things need to happen in order for digital assets or cryptocurrency specifically to be successful. One is there needs to be greater utility. There's an argument that Bitcoin's a store of value and it acts like digital gold, and that is its use case. And that may be true. I think it's our thesis that that size of that pie will never be big enough to kind of justify the aspirations and the opportunities that this technology brings. So we want to see digital assets kind of be used for far more than just storing value or being traded and speculated. The second one is that institutions, and institutions with a capital I, need to move into the space in mass in order for it really to grow over time. So I'll save the first part for maybe another time, but on the second part on getting institutions to move in, we at Bakkt and ICE fundamentally believe institutions will not move in unless they're trading on regulated markets. And what Jeff Sprecher, the chairman and CEO of ICE, our parent company and owner and operator of the New York Stock Exchange and 12 other exchanges around the world, his belief was that because the spot market is just inherently unregulated, just like butter and cocoa and corn and other commodities, those spot markets are not regulated, neither is Bitcoin. And by pulling it into the futures world, by pulling it into the regulated derivatives market, you now have an end-to-end regulated marketplace. So that's kind of the premise of Bakkt and why we're here, is to provide that custody service so you can have a physically delivered future that doesn't rely or touch the spot market or look to the spot market data in order to trade that contract. We think that's a big step forward for the industry and helping bring institutions in.
Got it. I'm actually going to try to pick apart that definition a little bit, because I know you've talked about this concept of end-to-end regulated price discovery. Can you sort of explain what all the elements of that are, and what will institutions be looking for?
So one of the biggest misconceptions is people think Bakkt has built a futures exchange. We have not. And I think that's largely because in the cryptocurrency world, most exchanges are kind of vertically integrated. So if you look at the cryptocurrency spot markets, they tend to be self-custodian, exchange, trading front end, and now many are adding prime brokerage services too. I actually think that's important. Bakkt wouldn't be here. The space wouldn't be where it's at today if it weren't for those kind of upstart spot markets that have come up over the past 5 to 8 years. But in order to grow, we actually look at the space to be much more horizontally aligned. So Bakkt is providing custody. We're starting with ICE Futures, the exchange, but what Bakkt really is a qualified custodian of Bitcoin. So by providing that custody support, one is we have regulated custody. That then allows a physically delivered futures contract to trade on ICE Futures US and to be cleared by ICE Clear US. So now you have what we kind of consider end-to-end regulation, regulated custody, regulated trading, and regulated clearing. We think that's really important to kind of help building a market that doesn't have any aspect of it that looks any different than what institutions are used to trading in other asset classes.
Isn't that a little bit of like tail wagging the dog, though? I mean, price discoveries happen on BitMEX and the Asian exchanges and Coinbase, right? I'm curious how you look at some of those other regulated markets, just given the liquidity mismatch between what you all are working with and what the institutions need versus what the reality is in the spot market.
I was waiting for one of these questions from Ryan. I knew it was going to come. So generally, we want Bakkt to be additive to the space. So when we look at what we kind of generally call crypto island, there's been a lot of crypto island built, and that is come over, take a boat to our island, and here you can do things that you can't do on the normal mainland. You can trade with 125x leverage. You can sign up with no KYC, and there's very few AML controls, if any. We've seen that emerge and improve over time, but generally it's very separate and cut off from the kind of existing modern financial system. That island's growing, and that's important, but I don't think it's ever going to grow quickly or largely enough to bring in the capital I institutions. So what Bakkt's trying to do is say, we're not going to go build on crypto island. What we want to do is take Bitcoin or any digital asset and pull it over to the mainland. So what we tell customers when we're kind of talking to them about our contract and our marketplace, and they say, this feels really scary and I just can't wrap my head around it, we say, take out the word Bitcoin and replace it with cotton. If you look at everything we're doing, it's the exact same for a physically delivered cotton future. There's a cotton warehouse somewhere in the Midwest, there's probably a bunch of them, and it trades on a contract that's in the central ICE guarantee fund and is cleared and regulated. And they start to look at this asset class and say, oh, it's not much different than other kind of commodities. It happens to be digital and intangible and I can't hold it, but they start getting comfort there. So Ryan, to your point, you're right. I think price discovery is absolutely not being, is still being led on crypto island. I think if we start to see institutions in mass move over, and that'll happen slowly but surely, it's not going to come rushing in on day one. These are smart, sophisticated institutions that operate on a much longer time horizon than I think the crypto world's used to. I mean, it can take us a few weeks, if not longer, just to onboard a customer, because we're not the only one onboarding them. They have to go through a number of other stakeholders, like a futures commission merchant. But over time, I think we'll actually start to see the capital and price discovery happen in regulated markets, and I think regulators want to see that happen as well.
Got it. So I actually want to draw a distinction in the way that both of you two just talked about kind of the future of what this asset class could be. Because I think you're sort of referring to two different regulatory regimes. So Ryan, when you're talking about disclosure, proper disclosure, and data standardization, that's almost more like, hey, these are securities, and that would be regulated by the SEC. Whereas, Adam, what you're talking about is this is a commodities-based business. We've got things like Bitcoin that's no different from cotton or grain or any other commodity, and that would be regulated by the CFTC. So I think there are probably challenges for both of those worldviews moving into the future. Ryan, for you, that might be for the token registry. Look, if you're trying to basically put the first page of the 10K, which I know is a line that you've used, how do you do that if in the future all of these things are basically commodities that there isn't a company that's technically supporting? And Adam, I think a potential challenge for Bakkt is it's okay if you view this world as commodities, but there might be different regulators that would say, actually, this is being supported by a company, and these behave more like securities. So how would you address both of those concerns?
Well, I think in general, but especially in this industry, common sense is underrated. And we're going to be in a gray area for years, if not decades, with respect to these assets in general, but especially assets beyond Bitcoin, which is a little bit more plain vanilla to wrap your head around, given its origin stories. So what we said early on was, look, we don't want to concede that all of these new networks and all these new tokens that are being created are de facto securities. But they look a lot like securities issuances if you think about the parallel just with the ICO versus IPO, acronym. And so what we said from day one was, let's figure out some common sense disclosures that would make sense across assets, whether there was a central team that issued an asset, created an asset centrally, has a treasury that they sell kind of on the secondary markets over time. And regardless of whether the asset is created that way or if it is truly more community-led, let's figure out what the common disclosures would be and then figure out who actually discloses it later. But let's at least define like the rubric so that you can come up with a standardized prospectus of sorts for the industry. And so what we're kind of broadly focused on is, could we create this public data library that becomes like a global utility that is very much an Edgar-like database that abides by the spirit of existing disclosures law. Because, even if these things aren't securities, you need some common taxonomy and some common data structures if people are going to be speaking the same language and if any sophisticated investors are actually going to start participating in these markets.
Got it.
Yeah, and I would say from our perspective at Bakkt, this is exactly why we've built the Bakkt warehouse, that's our regulated custodian, as a horizontal piece of market infrastructure. It's technology specific, it's asset classification agnostic. So what we've done is created the ability to safeguard cryptographic material. So whether that asset is going to be regulated as a commodity, as a security, as something completely different that we haven't even quite decided yet here in the US or elsewhere, that's kind of separate to the actual product we've built. So ICE is the owner and operator of, I'd say, the world's preeminent equities exchange, the New York Stock Exchange. So what I want to be able to do is help Bakkt build a product such that if the NYSE or any securities exchange comes to us and says, we want to start beginning trading security tokens, that's what we do best, is we allow matching and price discovery for traders where they're trading securities. They shouldn't care about what tech stack that is. If they're in the US and they're kind of on the DTCC tech stack, that's great. But if they're looking at this new technology and you can now tokenize an asset, but it's sitting in a public or even permission blockchain, we want to be able to abstract away the complexity of how that tech stack operates and say, here, securities exchange, you can plug into our custodial offering just like you could anywhere else.
Got it. So I guess it's really difficult to sort of look into the future, right? And this is still a very nascent marketplace. There's a lot of growth that's going on right now. Ryan, I know you have a kind of a bit that you like to talk about the different cycles of sort of the crypto industry and where we're at. Do you want to talk about that a little bit?
Well, this goes to the small I, big I institutional market that I'm talking about. The gist is that everybody gets way too far ahead of themselves in terms of how quickly this is going to materialize, right? Like overestimate the short term, underestimate the long term, and I think that's definitely true. And we're starting to see, even now, it still feels like we're getting deeper into a trough of disillusionment, even if the price is up significantly from the beginning of the year. And I think you can actually look at pretty neat 4-year cycles that match the spikes and peaks and valleys of the industry, and they're just wildly different audiences. So falling apart here, literally. In 2013, it was about the developers and hobbyists and like the hardcore libertarians, right? In 2017, it was about the retail speculators, right? The shitcoin, maximalists. And everybody during that run-up started to think, well, a lot of this is hot air, most of this is going to zero, but the institutions are coming. Now it's on everybody's radar. And there's some truth to that, but I think if you look at the 4-year cycles, we're not going to go from retail speculators to JP Morgan in the next 4-year cycle, right? Maybe in 8 years, right? So what if 8 years from now, or I guess 6 years from now, 2025, maybe institutions at that scale will be able to invest? There's a middle market cycle that's going to be professionals, it's going to be small I institutions, right? So to the extent that there is institutional investment, it might be through LP interests and crypto funds, but the active investment will almost certainly be crypto funds, family offices, and similar smaller players in the ecosystem. So a lot of the infrastructure that's getting built right now, yes, it could cater to a large institution, large I, but I just don't see them using this. If for no other reason, then it's just not big enough yet.
Yeah, not a whole lot to add. I agree. Someone said it's going to be a trickle then a flood, and the way in which we're looking at Bakkt is whatever that next catalyst is that kicks off another kind of bull market. We've seen it happen a couple times in the space, 13, 17. I'm quite confident it'll happen again. We want to make sure we have regulated, robust infrastructure that's not going to fall over when volumes pick up or regulators start scrutinizing the products that are being offered. What that catalyst is, I have no idea. We hope to be a part of it, that it's more of a utility-driven catalyst, because one of the big challenges for institutions that I see is that they don't know how to kind of fairly price this asset. They look at it and say, oh, I can't use a discounted cash flow. There's not a risk-adjusted return of future cash flows. How do I actually value what Bitcoin is worth, let alone the other hundreds of digital asset tokens? And to that, I don't have a great response. And I think that's why Bakkt is really focused on trying to drive utility and adoption of this beyond just kind of a speculative investment use case. So people are solving real problems by embracing digital assets and what they can offer.
I'm so happy I get to disagree with you now. So I think the utility of this whole asset class, I don't even know if it's going to be Bitcoin. I think Bitcoin is going to be digital gold and speculative store of value. When I say that, anyone with half a brain rolls their eyes, and you should. But if you think about what a store of value kind of macro thesis would be to invest in both gold and Bitcoin, if you think about that as a basket, right? I'm going to make a directional bet that the macro forces are such that we're devaluing currencies, and you need this as kind of a long-term hedge. Then buy 90 or 99% gold and 1% Bitcoin, and now that basket becomes your macro hedge. So when I think about like speculative store of value, I just don't see a scenario where that isn't the path forward for Bitcoin in the near, medium, and even semi-long term, and that's fine, right? But you have to think about this as potentially a perfect digital substitute for gold. And that basket, I think, is a narrative that could get quite a bit of traction. In terms of utility, I do agree with you. It's probably going to be something new that sparks interest for everything else in the industry. So it's probably not going to be ICOs again like it was with Ethereum, but maybe it's stable coins, right? Or maybe it's some of these DeFi applications that actually pick up steam. The interesting thing, though, with Bitcoin and everything else is, I really think you're talking about two completely different asset classes, right? There's Bitcoin and everything else. Bitcoin has always been about the asset. It's always been about this kind of unseizable form of digital gold, and it's been tech-enabled. Everything else that's interesting right now that's getting built in crypto is protocol-focused, it's application-focused, it's kind of core infrastructure-focused, and it just happens to be enabled through the use of these assets and kind of incentive mechanisms that take the place of a company and actually can align and help people coordinate around some of these public goods.
So I just have a question for you. In terms of when you're thinking about rolling out products, right? There's a vision of how the world exists right now. And a lot of the investing, trading activity has converged around two assets, right? So that's Bitcoin and Ethereum. Theoretically, there's a very different view of how the world might look in 5 years. How do you think about building a product roadmap that kind of bridges the gap in between what is in existence right now and what there might be in 5 years, to both of you?
Very conservatively.
I would agree. On the investment case, we're trying to make Bitcoin or any digital asset look and feel like any other asset that's kind of being traded. So that price discovery process, I think, is going to look very similar in 5, 10, 15 years. On the use case, and Ryan, I hate to disappoint you, I think I agree with you. Bitcoin may very well be used as a store of value, but for these other hundreds of other digital assets, and many that Messari looks at as well, I think those all can't just be a store of value use case.
Absolutely.
They have to be used for something.
Yep.
I think that's where we at Bakkt are saying we're part infrastructure that provides the ability to have efficient price discovery in a way that people are very used to, and I don't think that'll change. But we're also part consumer payments focused company that's going to try to say, how do we do things differently? How do we make payments or remittances or microtransactions more global, more instantaneous, and less expensive? I think that's the way in which the world may look very different in 5 or 10 years.
Got it. So how do you prioritize, I guess, those different revenue streams or products that you're rolling out, right? Like, kind of what are the things that you're looking at in the marketplace where it's like, okay, I want to focus more on payments or remittances right now, and how do you think about that in your sort of product mix and the client mix that you're serving?
I'll go first here, and this is kind of a trite answer, but it's not meant to be. We listen to what customers want. A big part of ICE's history, and ICE is they're about a 20-year-old company, and they're a Fortune 500 company. The way in which they kind of were generated, their genesis, was looking at a market for energy in the early 2000s that was inefficient and opaque and not transparent and lacked regulatory clarity, and said, how do we electronify this market and create a more efficient market? That's what kind of made ICE successful. They did the same thing for credit and credit default swaps after the global financial crisis, and now they want to do the same thing for crypto. So that part of the roadmap is very similar. It's following the ICE playbook. It's talking to customers, asking what they want, seeing what's broken, and kind of building that at an enterprise grade. On the consumer side, it's a little bit more difficult to prioritize or to understand. You kind of have to have this ability to look forward 5 years and say, what is the reality you kind of want to create, and how can we make things better?
Yeah, I mean, I guess on the data side, it's just trying as hard as possible to go as many layers deeper into the boring and invisible stack as possible. I can't tell you the number of other teams, some of which ran out of money, some of which are still kicking around, that came out with the pitch in 2017. We're going to build a Bloomberg of crypto. And our investors love that as a one-liner as they kind of talk about Messari. But my angle through this bear market was, how can I make the least sexy version of that can actually get at the underlying issues around data integrity and just broad quality? Let's build Edgar. That's a terrible business. That sounds ugly and boring and unsophisticated. And it is kind of the necessary plumbing that I think most teams in the industry that are successful right now are still nuts and bolts infrastructure companies. I don't know that that's a bad thing, but the skeptic would say, well, y'all are building solutions for problems that don't exist because no one really cares about this outside of Bitcoin. And I think there's a chicken and the egg problem where our bet is if we can solve a structural issue for the long tail of assets, yes, 90, maybe 99% of them go to zero or just kind of fade to obscurity, but the next cycle will have more interesting synthetic assets that a real world analyst could evaluate and say, this makes sense, it's got some type of cash flow characteristic or real world asset value that we can ascribe to it. And we know where to look for it, we know how price discovery works, we know which markets it trades on. And so solving some of those kind of underlying information issues, I think is maybe one of the three things that has to be solved, along with custody, along with regulatory clarity, for people to get excited about any asset beyond just the top two.
Great. So I'll ask one more question, and then I'll open it up to questions from the audience. But so within that long tail, right, of those sort of projects that aren't Bitcoin and Ethereum, there is the challenge, right, where you can't value these assets based on discounted cash flow. But what are some of the other fundamental metrics that I know that you can pay attention to now?
You can,
yeah. But
most teams just don't have business models or any idea for how to actually accrue value to their tokens long term, and 99% of them are going to go to zero. We said that back in 2017, and the only reason my co-founder and I didn't start a short-only fund called Icarus Capital was because we didn't trust the exchanges to accurately price our shorts, so we started a data company instead.
That's some amazing optimism. Thank you for that, Ryan.
Well, but about like a discounted cash flow, there are certain protocols where They're being used, and there's some type of network fees that are like the throughput or the cash flows of the system.
Yeah.
And in particular, assets that have some type of burn mechanism, right? Binance is a perfect example. They take a certain percentage of their profits, they use it to buy and burn tokens. That's got security-like attributes. And Binance is very interesting because they've experimented with a number of ways to capture value, with these tokens. But unless they're getting used and people are paying for the service to, or there's some type of digital asset that's being secured, whether it's digital IP or it's a computing resource or file storage or whatever it is, like if there's no real value there, there's going to be store of value, like very healthy narrative coins like Bitcoin that's got the digital gold meme. So there'd be meme coins. And then there will be synthetic type of securities or other new assets that look and can be valued much like traditional assets. And then there's going to be everything else. And the everything else bucket is going to be full of broken dreams and a continued decline to irrelevancy.
And we can end on that. I'm going to open it up to audience questions.
I'm really fun at cocktail parties.
Yeah. Questions from the audience?
We nailed it.
All right, I think you guys nailed it.
Or people are really hungry.
Probably both.
Okay, cool. We'll just wrap up our time then. Thank you both so much for this fireside. Really been looking forward to this, and thought it was very interesting.